$109,000 since October 30th. Today is Saturday, December 16th. I am Bagadon, and this is StockMarketCaddy.com. I hope you will indulge me these few minutes. It just might change your trading life. But let me say this. If you are getting it done with whatever it is you're doing, keep doing it. If you're not, stop, look, listen, think through what is available to you and what changes you might want to make. Let me show you something. This is the Russell, the NASDAQ, the Dow, and the ES futures. It's running an algo called the Nicholas timing model. The strategy told our monthly members and our annual members who have this tool on their desktop. Monthly members, by the way, get to see this every night. It told us on the 30th that the markets were trying to go long. This is a very important component, the VIX component. There were just a couple of oscillations, but this October 30th signal, as you're about to see, was confirmed on October 31st, right around Halloween. If a person had put on one mini contract and is holding it today, they are in fact up 109,000. If they had used micros, approximately 10,000. If they had put on 10 minis, $1 million. What is this Nicholas timing model? The Nicholas timing model is a mathematical model. It's a black box, not by design. It's a black box to us. It looks every day at the data of each underlying market, the data of the VIX, and the data of the 10-year Treasury. We've been running this for years. The signal comes in every day, doesn't change every day, but when it does come in, it comes in at the end of the day, comes in at about 5 o'clock, and we need one tick at 6 p.m. for it to be acknowledged, and then we know how Nicholas is positioned. Now, it's easy for anyone, I suppose, to look back. But I want to take a moment and show you and let you listen to the message we were sending our members back on October 30th and November 1. This, by the way, is a new secondary repository website that we will be rolling out to all of our members, monthly and annual, in the next few days. But let me show you. Let's go back in time. These are the nightly videos that we were posting for our members. On October 29th, the markets were most certainly in corrective mode, bearish. On October 30th, they turned yellow, caution. I'm going to let you hear in a moment what we were saying. On October 31st, green, long. Nicholas was going long. And then on November 1, confirming long. Now, I'm going to play some snippets so that you can hear what we were saying to our members. But remember, I cannot play your game. You need to play your own. We're here to guide you. We're here to mentor you. We're here to provide you the tools to hopefully play your game. If you are a serious student of your trading game and you want for free all 4 of these videos so that you can see and hear what we were looking at when the market was bearish, and we had been bearish for a few weeks leading into the end of October, and then hear how the market was transitioning, and hear word for word what we were saying to our members. If you want to hear all 4 videos, they're about 15 minutes each, 15 to 20 minutes max, I think. Let me know, send me an email, and I'll be happy to do that. Enjoy the next few minutes and let me show you and let you listen to what we were saying back then. Hi everyone, it's Don. It is October 30th, Monday at about 10 p.m. Eastern Standard Time here in the States. We do have some new positions to report in on the Nicholas timing model, the Russell, NQ, ESYM. They've all tripped off tonight long. They are underwater a little bit. However, we drop down to the VIX daily component, and the VIX daily component is still long from the 26th. So that's not the position that we need to see. We need to see the VIX confirming the long by being short. So right now, tonight's date, when we post this video, the date will be yellow. It's neither long nor short. What we know is, for the years that we've been doing this, usually the next day, certainly within 3 days, one of two things is going to happen. The VIX is going to go short and the market is going to continue to go long and get green. Or the VIX is warning us that this might be a bull trap, and the VIX stays long and the markets give up the ghost and go back into a short and get short. So we want to be cautious. Let's look at the VIX structure. The VIX itself is risk off, 9 days. A little bit of selling, which could be perceived as being bullish, but it's still risk off. The spot VIX, completely risk off. Maybe 30 days out, a little something percolating, but nothing to speak of. So the market still has a bearish tone. Skew. Now the skew, as the market is coming down, now this is kind of interesting, a little bit of what we call setting up a fractal low at 130. Normal range is 120 to 130, so it's at the high end of the normal range, which means that the big money, they're not buying as many puts, and they might be speculating a little bit more themselves on the call options. So not super bearish, but it looks to us, this little fickle finger, a fade award here, this like this little middle finger. You just don't want to see that will get taken out like very soon. This thing could continue to rise. Let's look at the yield curve. The yield curve still very inverted but narrowing. Futures sentiment gauge. Where are we? The VIX has come really in, and the market has come up, but it could come up a lot more, especially if that VIX comes in. So it does look like we have a little bit of a counter trend bounce coming in. Hi everyone, it's Don. It is Halloween. Happy Halloween. And Tuesday at about 9:18. Hope you had a good trading day. Really nice volatility. And we do have a couple of things to report on. The Nicholas timing model on the 30th went long. But we didn't call it a confirmed long because the VIX was also long. That's no longer the case. Tonight, the VIX went short. So we're going to go from the yellow caution. Tonight's date will be green, and Nicholas is indicating to us that the market is likely to rally. Now, he does get trades wrong. Okay, so there's nothing is 100%. So just always know that. But let's go through our paces and see what else we see. And here, we're the VIX itself on the VIX futures saying it's been risk off for 10 days, but it's risk off caution, meaning that we might be getting ready to go risk on. And the 30-day or the weekly on the VIX is giving us risk on resumes. So we could be the 30-day, 90-day. This is actually starting to indicate on the spot VIX that the risk off is on a pause. So we're starting to get a marker, even though the futures are down tonight, getting a marker that maybe we are going to see a little bit of a rally. The skew, and look at what the skew is doing. The skew is drifting down. It's now in the normal range from 120 to 130. So they're not buying as many puts. The yield curve really holding the same. It's inverted, but you know, a little jury rigging with the short-term rates could send this thing positive, and I think things might begin to rally. So, but we never know on that. We'll keep an eye on that from night to night. And then we look at the VIX itself. The VIX is at 40. The ES is at 30 or 40. The market should be over here, should be at 60. So if that VIX stays suppressed into tomorrow, and if we gap down in the morning, I'm going to be laying back in the weeds and looking to go long. It looks like we're going to bounce. Currencies, what is going on with the yen? Yen is just getting smoked. Don't want to short it down here, but boy, the American dollar been very strong. All right, let's go look at the ETF world. So we did get a little bit of a bounce. They were all in panic. So we got a little bounce in everything. I think that might continue, especially if that VIX can stay suppressed and come in further. Hours ago, the ES goes long, 17, losing my voice. The NQ goes long, the Russell went long, 15, and the VIX went short, 35 hours. So there you go. So we have the embryonic start of maybe this sell-off over the last 3 to 4 weeks is maybe coming to an end near term, and maybe we're going to bounce for a few weeks. Going to start coming into the holiday period and Thanksgiving here in the States in a few weeks. So I'm thinking, you know, bit of a rally. Renko chart, and here it is. Here's the bounce. So we don't want to take out that low. We could come down or brick it too, but we got to protect that low, or they need to. The market does. 41.41. And then we're going to probably come up into here, which would be 42.50. We might stall. We might pull back a brick or two, and then we might go again. And if we can get above 42.50, we could be back in range, and everyone's going to be thinking that this near-term sell-off is over. Then they might think this one is over and this one is over, and you know, maybe we rally up into here. You know, we could, you know, maybe it's Christmas time, holiday time, and maybe we're back up to, you know, 44.50 or something like that. It's possible. It really is. And no one is looking for that right here, right now. We are. Write it down. Hi, everyone. It's Don. It is Wednesday, November 1st at about 8:46 to be exact. Hope you had a good day today. Turned out to be a Fed day. And let's take a look at our paces, though. The Nicholas timing model went long just the other day on the 30th. The VIX was not confirming it on the 30th. The VIX confirmed on the 31st. This confirmed position now is up collectively, real time, 15,700. Not that unusual. What we don't know is how long are we going to be looking at this. Write the date down. Take a picture of the numbers. And as we go, you will learn, get an appreciation for what it can and cannot do. It is entirely possible that we are looking at this long signal in December. And this position could be up tens of thousands, maybe. If the market gives it up, though, we'll see it here. We'll see it in the way of the VIX, and we'll see it on the position itself. We look at the VIX. Guess what? Was risk on pause last night. It's now risk on. And risk off pause here, and risk off caution. So the VIX is doing what? It's coming in. And as long as it comes in, the shorts are going to be more apt to cover, and the speculators are going to be more apt to buy than sell. That's what that means. Now it can change, but that's what it means. And as prices going up, you know, this skew is still now in normal range and trending down. So as we were coming down, the fear was dissipating. So it kind of makes sense that we bounced. And we have a little fractal low here. We have the market making higher highs. And we're near term, the immediate term is up. Tonight's date, by the way, on the video will be green. The yield curve dipped. That could have been, you know, courtesy of the Fed on the front end. The fact that they didn't raise rates and they dipped a little bit. I'm not going to overplay it or overanalyze it. It is what it is. So here's the VIX at 20. The S&P we thought was out of proportion and out of step. It really should be up at 70 or 80. So it could head there. These markets could be heading there. We'll have to keep an eye on things. The dollar has come in. Aussie dollar, what's going on with the Aussie dollar? Getting a really good bounce. Gold, metals, hanging right in there. Oil, it's getting down, getting close to an area where we might want to start looking at buying it. Maybe intraday, maybe getting long on a swing trade. Here are the bonds. The bonds rallied. Remember when they were down in here? So and we want to look at the intraday 53 hours ago, more than 2 days ago. 60-minute goes long at 41.87. Get nearly 100 points. A call option on the S&P cash, it's about 10,000 bucks. Here is the NASDAQ 7,600, 1,000. 57 hours ago, the VIX came in. I was telling you that we're likely to bounce, and we've been saying that, and that's what we've done. Right? So I know a number of you did, in fact, pull the trigger. Congratulations. Enjoy it. Some didn't, but you can learn from that. There'll be another time. Maybe we're going to head to euphoria. Maybe. And nobody's going to want to fade. And the next big trade, I'm not saying it's here now. It isn't. Will be a fade, but it's not ready yet. We look at the traditional chart, and here's the VIX coming in. As long as here's the VIX coming in. As long as that's coming in like that, these markets are gonna run. We look at the Renko, and here's the move right back up to there, to that where it broke. Likely to pull back. We might gap up a little bit tomorrow, then pull back a little. I would expect it to hold very close to that, and then we might segue and we might run again. Everybody is short. All these people are short, all these people are short, all these people are short. So we could leg back and put a squeeze on and force all these people to cover. And it could take us, you know, seasonally, could be a hell of a run. Nothing's really changed, right? News stories and earnings, nothing's really changed. It's just money flow. Well, folks, I want to say thank you for stopping by. We're back to December 16th. Midday, Saturday. In the next few weeks, the next few months, the next few years, there are going to be some wonderful opportunities to make money. There will be, for some or for many, awful opportunities at negative outliers. We don't want any negative outliers for our members. That is the first lesson. Learning not to lose big. We will have losses. It is not possible to play this game without losses, but we don't want big individual losses. It is not possible to win on every trade, and it is not possible to get it all. We just got to get our share. If you are getting your share and you are learning with whatever it is you're doing, keep doing it. But if you're not, worse than not getting your share is not learning, then maybe you want to visit us, and feel free to give us a call and email us again your questions. We don't suggest that this is for everyone. Remarkably, without any advertising, Stock Market Caddy has been growing at a 50% clip every year. And we're very grateful and thankful. We're humbled by it. Our retention rate at the monthly membership is over 90%. And we think that speaks volumes. Again, we are grateful and thank you to our members. Our annual memberships, it's a bigger challenge, we understand that, is at 75%. We take a look at these numbers each and every year. Our motto here is learn to trade your own game. We want to make our members or the membership more cost effective every year. Your costs never go up once you've joined, and we're trying to increase the value every year. Feel free to give us a shout for next. It's going to be a hell of a year. It's going to be tremendous volatility. And I can promise you one thing. When the markets turn down, and they will, we will not miss it. Our algos will not miss it. It may be hard to believe. The question is, will you be there with us? Will you have the courage? Will you have the experience? Will you have the confidence to act? We're ready when you are. We wish you the best. Happy New Year, everyone.